From the Lineweaver Wealth Watch Center, this is the Financial Quarterback.
I'm Jim Lineweaver, your financial quarterback since 1993. Today we're diving into one of the biggest tax updates in years with the One Big Beautiful Bill Act. This new legislation represents a game-changing opportunity, but it also comes with new landmines if you're not planning proactively. And that's exactly why now is the time to work with an experienced tax planner who can help you turn these complex situations into good strategies. That's why I have Mark Sipos, the Director of LFG Tax Services, with us today, and here to help us dive into these topics.
Thanks, Jim. This is a very large, comprehensive tax bill. And of course, most of us have seen the headlines with no tax on tips, no tax on overtime income, the 2017 Tax Cuts and Jobs Act becoming permanent, and of course, the extra $6,000 standard deduction for those 65 and over. Now, there is a phase out for that deduction starting at $75,000 for single filers and $150,000 for married filing joint. But let's take a look at the estate tax exemption, which rose to $15 million per person and also is adjusted annually for inflation.
Well, that's a major shift. Far fewer estates will face taxes at death, which can make a huge difference when it comes to passing wealth to the next generation. So if your estate plan hasn't been reviewed recently, now is the time to make sure it aligns with this new threshold.
Exactly. And let's take a look at the small business and those investing in small businesses through pass-through entities. So the qualified business deduction of Section 199A has been made permanent, and it's a 20% deduction on all net income derived from those types of entities, which is a really powerful deduction.
Yeah, this is a powerful tool for reducing taxable income, but it has to be structured properly, and there's plenty of room for mistakes if you're not working with a tax professional. So what other business-related provisions stand out to you?
For assets placed in service after January 19th of 2025, the 100% bonus depreciation has been reinstated and made permanent. In fact, they expanded it to include qualified production facilities, which are non-residential commercial buildings like factories, as long as those are constructed within a certain time frame that's outlined in the bill.
And if you've been investing in innovation, R&D expenses can once again be written off immediately. That could create significant savings for companies reinvesting in growth. But there are some other caveats presented in the bill, aren't there?
Yes, especially for high income earners. For example, in 2026, there's going to be phase outs regarding charitable contributions and how much you're allowed to deduct. So it's important to be aware of these thresholds in the income riders.
Yeah, we're entering a new area where strategic planning can save or cost you hundreds of thousands of dollars depending on your situation. And with so many of these provisions made permanent, the window to act is wide open, but only if you take the next steps. So whether you're managing a significant estate, operating a thriving business, or just looking to build some smart tax strategies, we're always here to help. Give us a call. Stay tuned for Fox News Sunday.